This is Alex, Chief Strategy. So let's get started. First of all, we start with the spice as always. We didn't make a video in the past few days. We've been really busy. I try to keep you updated as much as possible on Twitter. Also yesterday with the outage from Facebook and so on, we decided there's no point in trying to do a video because we couldn't do it on Instagram as well. So today we are back with the video. I hope as many of you are joining us tonight so we can talk about what happened in the markets. We are continuing to be in this downtrend. Have been sold either faster, slower, a slower drip like we had in the past few days, which culminated on Friday when we went as low as 427. Yesterday we had another poor day. Here on Friday this was a reversal because we went to 427 and then we reclaimed 428, so a lot of people went long on this day. We became a bit more bullish on this day because this was a clear reversal in the spice, and then yesterday we had a big drop, so the bears showed again their force yesterday. Today we gapped up and we managed not to fade throughout the day, so anything that you bought in the morning, you knew the levels from before. We talked about in the morning game plan whether it's going to be a feeble bounce or not. It turned out that it was a turnaround Tuesday of some sorts, but only as a day trading opportunity, because from a larger perspective, if we look at how we closed, especially that we closed 2 points below in the spice, same is true for the Qs. We are still in this downtrend, we are still in this huge bear frag, and the longer we stay below this 437, the higher the probability we're going to drift lower towards the 200 day. What are the main headwinds? As you well know, we have the debt ceiling issue, which needs to be resolved in the next couple of weeks, as Secretary Yellen pointed out, and she keeps pointing that out. This will most likely be solved. We have the treasury yield, which is again above 1.5, which is very detrimental to the tech sector and to growth names. We also have some issues with China, with the Evergrande situation, with their regulations and so on. Also the Taiwan issue, so there are a lot of headwinds. Plus we are just starting the earnings season this month for the big tech companies. There are going to be a lot of comparisons to last year, and we have a very strong dollar, which is not helping exports as well, so this will be detrimental to stocks such as Apple, which sell a lot of their products. 29.39 is your pivot support for tomorrow. 435.49 is pivot resistance. We day traded a lot today. We were long Apple, Amazon, Google at some point. They all worked great, but we exited all of them, and we just have a few calls left for Apple, AMD, Nvidia, and Tesla. We don't believe that this is the beginning of a reversal, because this is not a capitulation move like we had here and a nice reversal. This is just more of an oversold bounce from our perspective, but the market has been very frustrating recently, and if you've lost money or if you've lost patience with the market, believe me, it happens to the best of us. It hasn't been the easiest of markets. It hasn't been a clear correction, clear breakdown. It's just been drip lower, then a little bounce, then the drip continued lower. So until we have a capitulation move, or until we have some bigger bounces and we manage to reclaim some important resistance level, we are not out of the woods yet. So this is the main thing that I want to emphasize today. We are not out of the woods. It's just a bounce. Yes.
Sorry. Carletto asked, do we use EMA or MA on forex for intraday?
We use EMA. We use EMA, the exponential moving averages, because we are momentum traders, but you can use the moving averages as well. It depends on the type of trader that you are, but I suggest, especially since you are trading forex, the EMA are more potent. And as a rule of thumb, whenever you are above the 8 and 21 day and you're not extended, you can be long that particular asset. And when you are below the 8 and 21 day, either you look for an oversold move and you can try some levels against the 50 day or the 100 day, or you get out of the way. Or if you're a good short, this is the moment to be short. Look here in the spice, if you have been short from this day, from all the way from 427, this is 20 points in the spice that you could have made just in one corrective move. So all in all, this is the spice. Still in this downtrend range. Today it was good for day trading, but still not the best.
He uses DMA.
21
for intraday. Yeah, you can check out our website and read our daily charts, for example, and you'll see we always use EMA, but they are quite, I mean, it's not such a big difference. You can guide yourself.
Yeah, we use the EMA. This is how we got used to them, but a lot of people, they use the simple moving averages, the SMA. Now let's quickly look at the tech sector. Strong day, started 353.48 is the pivot support. 359.69 we got rejected just below the 8-day. We closed below the 100-day, so we're again in no man's land. We have a point of reference here, 350.32 is yesterday's low, and the 200-day is all the way down at 440, so be very, very careful in tech sector. As I mentioned before, earnings comparisons this quarter, China, strong dollar, debt ceiling, interest rates, so big headwinds for tech, so be very, very careful and selective in the tech arena as well. Guys, if you have any questions, I'm more than happy to answer them. You can email me straight, alex@eclubtrading.com. You can write them on Instagram, and I can make a video with the questions as well. Here at Eclub Trading, we grow together, so this is our motto, and we try to keep by it. Now let's look at Apple. Apple was a nice day trade. It wasn't the easiest of day trades. It never is the easiest of day trades. I love trading Apple. I know most of you trade Apple as well. It's a great barometer for the market. Like we talked today, Apple was on the weaker side. It started very poorly. We bought some in the morning against the low of the morning, which was 139.50. Then it broke that low. We exited because we keep tight stops. And then we saw the Qs and the SPYs bouncing, so we said maybe Apple is going to have a bounce as well. We were correct. So we re-engaged Apple around 139.80, and it gave us a really, really nice trade to 142. As more and more people got involved in the trade and more people bought, we decided to exit our position, and for the moment we are correct because Apple pulled back $1 at the close. There was another sell program which frustrates traders because if you're very easy, you can be short, but if you go down, then you have a bounce, and then you end up lower at the close. There's nothing much that you can do. So this is what we suggest. Stay tactical, book your trades. Okay, it's not going to be a great profit, but book those profits. Make sure you're out of the way, because look at here, Apple below the 8-day, below the 21-day, below the 50-day, below the 100-day. So the only big point of reference is this 138.27, and then the 200-day all the way down to 134. Amazon, another great example of a broken stock. This was a broken bounce, and you can see it clearly on the chart here. We played Amazon in the morning. It looked like one of the strongest stocks. We bought around 32.10, gave us a really nice trade. We exited here. 32.56 was a big resistance area. I had a bit of FOMO as I saw Amazon going to 32.60, but I said, okay, I'm going to get out of the way. It was a nice 40-day points in Amazon. You don't often get that in Amazon. It's really, really hard to trade. Please, Mr. Bezos, split your damn stock. It's getting really, really annoying. Double bottom here for Amazon, maybe 31.75, 31.76, but Amazon pulled in $40 at the close, so not the best of candles, an inverse hammer, so it's looking lower. As you can see here, if we look at the macro chart, you can say that Amazon, this can be also head and shoulders pattern. So if this is a head and shoulders pattern and we have the neckline here at 31.75, then we can drift a lot lower, and the next big point of reference is around 2800. So be very, very careful with Amazon. Great company, great products, not so great management at the moment by not splitting their stock, which is very, very difficult to trade and very, very chaotic. So Amazon completely broken below all the moving averages. No position for us here, just day trades, just bounces for cash flow, which is always good for traders. Tesla did not participate in today's rally. It showed some weakness in the morning. Then we engaged Tesla around 785. It gave us a trade to 795. Then we put our stop around 788. We got stopped out. We still have some calls left. All in all, Tesla is still keeping inside this bull flag that we highlighted here before. So today's low kept again above the 8-day, which is very encouraging given the market conditions. So we expect Tesla to perform very, very well once the market exits this corrective phase. Even though Tesla did not participate in the rally today, it did not fall apart. So 774.20 is your pivot support for tomorrow, which is also the 8-day. 797.31 pivot resistance, and the next big resistance 807 here in this channel. So all in all, Tesla still above the 8-day. Similarly, I'm not going to go over it now, I don't have time. Netflix, great trade for you. I mentioned it in the morning game plan. I said that if the market has a potent bounce, then Tesla and Microsoft are in pole position. I was correct about one of them, not Microsoft, Netflix. I was correct about Netflix. Netflix, new all-time high, acting very, very well. A lot of people watching Squid Game and so on. Even though it's not a pure post-COVID play, the market seems to want to frustrate as many people as possible. Netflix looked dead 2 months ago. It was playing with its 200-day, and now it's at all-time highs when the market's in a corrective phase. So Netflix was a great day trade. If you followed us, please remember you can always go to our website, ECLUBTRADING.com. We have some great plans for you there. The morning game plan shows you exactly what we have in our portfolio, the main charts of the day and how we're going to approach the day, what day trades we are looking to make, what long positions we have, what swings we have, and so on. And also we keep you updated throughout the day on our website. In the section news, you find there our updates, or you can go to our Twitter at ECLUBTRADING1 and you can find exactly what we are doing live. Facebook, I talked in the morning game plan about Facebook. Facebook is a very, very resilient stock, and even though many people believe that Facebook is done and dusted, I would not discount it yet. Facebook is a big part of our lives. Just think about Instagram and WhatsApp. Today, nice candle for Facebook. If you've been long in the morning, Facebook 326 all the way to 334. Not the best of close. Candle is still below here, so there is still a small gap here between 336 and 338. The whistleblower today in Congress blamed Mark Zuckerberg for everything that's wrong with Facebook. It happened before. We know with the antitrust lawsuits with Facebook, with Google, usually they rally on bad news. It wasn't the case today, but still a nice move in Facebook as a day trade. Still a broken stock below all the important moving averages, just above the 200-day. So your Facebook, you have to put in a stop around 323 or this 322.70, because if it breaks this one, then there is a big gap to the downside. Now let's talk a bit about our swing trades, some reopening plays. NCLH, we bought NCLH in here on this day one candle. We rode it all the way to 29.45. It looked very, very extended here. We exited around 29. Then it drifted for 4 days, and we were lucky, or you call it as you wish. After 4 days down, I usually look at the stronger stocks out there, and I had a thesis on NCLH. So we decided to re-engage NCLH 3 points lower from when we sold it last week. We bought it in here. We were lucky with the Merck pill announcement. It gapped up, and now it's holding above the 8-day. It's holding this gap that it created. So all in all, NCLH, really nice 2 weeks swing trade. This is not our job to predict such moves. Our job is to stay tactical. Our job is to book trades and to make money for ourselves and for you as well that you are following. So this is one of our swing trades. Another swing trade for us is Ford. Really nice day one here above the downtrend. Then we've been in it throughout this period. Never buy Ford on strength. Always buy weakness. Today we bought some more around the 8-day, still keeping above the 8-day. This looks like a nice bull flag. I'm just gonna draw the line here. And if you wanna be tight with Ford, you can move your stop up to around $14. We're gonna keep it around $13.80 because we wanna stay engaged in Ford. It has a great pipeline for EV cars. EV cars are the future. They have a big competition from Tesla and other manufacturers, but they have the resources and they have the brand name to continue higher from here. So all in all, Ford is looking good despite the corrective phase in the market, still above all moving averages. And when stocks are above all the exponential moving averages, we are definitely trying to be long those stocks. We are not short them. Uber, a bit more chaotic than the rest, but all in all, we are still long Google, still above the 8-day and the 100-day. It's getting tighter in here. The chart, it's still keeping this gap. This is our exit 42.18. We bought in here, so it gave us some nice trades. We always bought in on weakness and we sold on strength. The next big resistance is this 47.43 for Uber to act better, but we are still long Uber. We like the story behind Uber, and we like to be involved in this stock as long as it keeps above 42.43 for a post-COVID economy. Lastly, I want to talk a bit about crypto. We do play crypto as well here. Andrej is talking to you guys more about crypto and charts in particular. I usually just focus on one or two. This week I focused on Bitcoin because I really like the chart here. I like this day one. I talked about this level 45,000. it managed to push above this 45,000. I got engaged in here at 45,000. I tweeted to you guys, you can, if you go back, you will gonna see. And I have been adding here on this candle, then in this, then I trimmed around 48,500 because this was the first resistance. In here, it looked like a really nice bull flag. I talked about this in the weekend, also in the weekly digest. So I added some more on this bull flag, and today we got paid. It went as high as 51,400. So all in all, Bitcoin is looking really, really well. The next big resistance level is 53,000. With all talks about inflation, Bitcoin should be a beneficiary, but as you well know, if the correction continues, if we are heading lower, usually even crypto does feel the burden at some point. So make sure to know your levels. If you played it by a tier system like we like to do it, this was a tier 1. We trimmed some, half a tier, around 48,500. Here we put on another tier and a half, so we were tier 2 in Bitcoin in this bull flag, and today we are tier 1 again. So this is if you want to play it in tiers, and this is how we do it here at ECLUB Trading, and I hope more and more of you will join us. We also have some nice free products that you can subscribe to. Go to our website and you can find everything that you need there, eclubtrading.com. Thank you so much for following us tonight. Thank you so much for your questions as well, and we look forward to seeing you tomorrow. Just remember, stay tactical, book your profits. Is not the easiest of markets. I've been talking to lots of friends. They have been trading for lots of years. This is one of the hardest tapes out there because there's a lot of sideways action, there's a lot of indecision, and there are a lot of absurd moves. And Netflix is just one of them from my point of view. In a post-COVID economy, why would a stock like Netflix, which was completely broken and the subscriber numbers are going down everywhere, why would it make new all-time highs while stocks such as Apple, Facebook, Amazon are completely broken? If the market will correct, I don't expect that Netflix will go much higher than this. If it will start to act better, if you are a long-term investor, have a look at Apple, have a look at Amazon, have a look at Microsoft and Google. These are safer place for long-term investors. Here we are being tactical, we are day traders, and we like to be above the 8 and 21 day, and there are very few stocks and assets above that. Tesla is one of them, Bitcoin is one of them, Netflix is one of them, Ford is one of them. So pick and choose, but be very careful with size, because the worst may